Imagine a stock that's doing everything right, expanding its products, showing strong user growth, making solid moves in the fintech world, yet every time the market sneezes, it catches a cold. That's SoFi. And today we're going to unpack the wild ride SoFi is on and what might be waiting just around the corner. All right, let's get into it. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi Technologies, the fintech company that aims to be the all-in-one financial platform for the modern generation, continues to ride the wave of a highly volatile stock market. And while it often shows strength and resilience, the broader market conditions keep yanking it back down like an anchor tied to its foot. At the beginning of today's trading session, there was a surge of optimism in the air. Why? Largely because of excitement generated by big tech players like Microsoft and Meta. That positivity in the tech sector carried over into the broader market, lifting spirits and prices, at least for a little while. But as the day went on, reality set in. Fresh economic data came out that quickly changed the mood on Wall Street. One report showed a slight bump in manufacturing activity, but not enough to suggest a rebound. The index still came in below the 50-point line, which means the manufacturing sector is technically still contracting. Then came the jobless claims report, which was higher than expected. More people filing for unemployment than analysts had forecast. That's never a good sign when it comes to investor sentiment. This pattern of bad news sparking intraday dips has become frustratingly familiar. Almost every day this week, some piece of data or economic report has spooked investors. While the market does its best to recover by the end of the day, the emotional roller coaster is starting to wear everyone down. And as if that wasn't enough, political uncertainty added more fuel to the fire. Former President Trump made some strong remarks regarding international oil buyers, particularly targeting those purchasing from Iran. His message was loud and clear. Any country buying oil from Iran risks cutting itself off from doing business with the United States. While not mentioned directly, many interpreted that as a pointed warning toward China, which relies heavily on Iranian oil. Add the threat of new tariffs and trade tensions back into the mix, and it's clear why the market is on edge. Investors are desperately searching for reasons to stay optimistic. They want to believe in a rebound, in a new rally, in a reason to hold on, but each new headline seems to chip away at that hope. Now let's bring the focus back to SoFi. Despite the market turbulence, there haven't been any major announcements from SoFi's leadership today. No new filings, no surprise earnings calls, no groundbreaking product launches. But there is something interesting bubbling beneath the surface. A respected financial research page on social media pointed out that SoFi's Buy Now, Pay Later feature, originally launched with a $500 spending limit, has now quietly been increased to $2,000. That tells us two important things. One, SoFi sees continued demand for this product, and two, it's likely been working well enough to justify expanding it. That's a sign of confidence and a potentially strong revenue stream going forward. And while no official press release accompanied this move, it's worth noting how SoFi is gradually but strategically evolving. Even in a tough economic environment, the company seems focused on long-term growth over flashy headlines. Now, when it comes to short sellers, the investors betting against the stock, they seem to be sitting on the sidelines today. Around 115,000 shares were returned, suggesting a bit of a pullback on bearish pressure. That doesn't mean shorts are giving up, though. Over 13% of SoFi's available shares are still being shorted, which equates to nearly 150 million shares. That's a significant amount, and it tells us that skepticism about the company's short-term future is still very present in the market. Interestingly, some analysts are still optimistic. A new rating popped up recently, giving SoFi a price target of $20. That lines up with other bullish predictions we've seen in the past, and it shows that some professionals believe SoFi's current price doesn't reflect its full potential. These ratings don't guarantee anything, of course, but they offer insight into how experts are viewing the company's trajectory. Now let's zoom out for a second. Why does SoFi continue to struggle despite strong user growth, product expansion, and favorable analyst opinions? It comes down to timing and macroeconomic conditions. Every time there's a ray of hope, a data report or global event casts a shadow. The market is sensitive, maybe even hypersensitive right now. And for a relatively young fintech company like SoFi, that makes staying afloat feel like swimming against the current. Another factor that's contributing to all this is how the big players, institutions, and hedge funds are behaving. A closer look at today's trading shows a lot of selling activity from large accounts. These aren't your average retail investors. These are massive players likely using algorithmic strategies. When these institutions start to sell, they often do it in waves, causing a ripple effect that drags the entire stock down, even if there's no fundamental reason to do so. What makes it more complicated is the opaque nature of some of these transactions. A lot of large trades happen off-exchange, in what's known as dark pools. These are private markets where big investors can move large amounts of shares without affecting the public trading price. That's where short sellers love to hide their moves, and it's why the full picture of who's buying or selling can be hard to see in real time. So where does that leave us? Right now, SoFi seems stuck in a tug-of-war between long-term optimism and short-term chaos. The company continues to innovate and expand, but the broader market isn't giving it much of a chance to shine. It's like trying to grow a flower in the middle of a storm. It might be capable of blooming, but the conditions aren't ideal. Is this frustrating? Absolutely. For investors who believe in SoFi's long-term potential, watching the stock drift lower despite positive developments can be exhausting. But for those with patience and a long-term mindset, this could also be seen as a period of opportunity. Historically, some of the best returns come from buying when things feel the most uncertain. When no one else wants to touch a stock, when sentiment is low, when the headlines are ugly, that's often where real wealth is built. It's not easy, it takes nerve. But those who can block out the noise and focus on the fundamentals often come out ahead in the long run. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.